Hey, what's up, stock compounders? Brad here. So let's talk about the 10 most popular stocks on the Robinhood investing platform in the last week. So here is the top 10. As you can see, the bulk of the activity is in the top three: rocket companies, Apple, and Microsoft. So this is number of accounts that have added those positions to their portfolios in the last week. And you can see all of that at robintrack.net. So let's dive in. What's interesting to me, one of the interesting things to me, is we've got the largest public company in the world here is the most popular stock on Robinhood in the last week. Of course, the second most popular stock, or the second largest public company in the world, is Saudi Aramco, which isn't on this list. But the third is Microsoft. So you've got two of the three largest companies in the world that have had a lot of activity on Robinhood in the last week. Apple, obviously, there's a stock split coming up, a 4-to-1 stock split. I think even more significant than that is the recent earnings report that came out showed Apple beat the earnings expectations. I think that's driving a lot of this Robinhood activity for Apple. But at a price to earnings ratio of 33, it's hard for me to get excited about Apple personally. There are 11 super investors that own Apple, so very strong number there. As you can see, earnings yield very low, much lower than I'd like to see. Return on invested capital, solid. This is clearly a great business. Problem is, everyone knows it's a great business, and that's why the price is currently so high. So I'm going to take a pass on Apple. Number two, rocket companies. Now this IPO'd just a few days ago at $18 per share, currently around $23 per share. It's, Quicken Loans is their big product. It's really a solution for people who want to get mortgages for their homes in a kind of simple, technologically advanced way. So you got digital solutions for mortgage and other loan products. That's rocket companies. Don't really have any earnings at this point. No super investors own them. Because there's no earnings yield or return on invested capital, and there's no value investors club write-up. Part of that is we have a 45-day lag time in Value Investors Club before we can see these write-ups. So that's part of the issue here. But it's way too early for rocket companies personally. It's going to take some time, if it is a compelling buy, for some of these rows to start to fill in. And that's fine. I can wait for that to happen. Microsoft, like I said, second largest company in the U.S. Microsoft, there's talk about Microsoft buying TikTok, which is really big news. I think that's what's pushing people to buy Microsoft. It is very expensive. It's even more expensive than Apple from a price to earnings ratio perspective. One of the big issues I see with these highly visible acquisitions like TikTok is that it's very difficult for a company to kind of benefit in the long term from acquisitions of this type. They tend to pay too much and not make that money back over time. So I'm skeptical about the Microsoft acquisition of TikTok. I just saw today President Trump signed an order banning TikTok in the US. So That's part of what's behind this potential acquisition from Microsoft. It'll be really interesting to see how this plays out. Obviously, TikTok is one of the most popular social media platforms right now. And Microsoft obviously owns another really popular social media platform in LinkedIn. So it'll be very interesting if they buy TikTok to see how they integrate that. Maybe they try to merge it with LinkedIn. More likely they keep it separate because LinkedIn, so focused on business relationships. TikTok is more like an Instagram, like a video Instagram kind of thing. So completely different demographics, but it'll be interesting to see how that unfolds. Value Investors Club write-up from just 2 years ago on Microsoft, where it was a bull case to buy Microsoft stock at $108 per share. Obviously Microsoft has done very well in that 2 years since that thesis was put out, almost double in 2 years, which is a fantastic rate of return. Dphc, another one of these blank check companies popping up. This one aims to target a real estate related private company. So, nothing of interest to me in these screener columns. Less than 100 million market cap, just waiting to see what company they acquire. I'm not interested in this at the moment, but it will be interesting to see, what gets bought from that. ADT, Home Security Services Company. Not a small home security services company, 9 billion market cap. Earnings haven't been great in the last couple of years. That's part of why the price to earnings ratio is high. There's one super investor who owns it, very low earnings yield. Like I said, earnings have been struggling. There is a Value Investors Club write-up from about a year and a half ago, and the price hasn't really moved since then. So I don't see much to get excited about in the way of ADT, but I am curious why it's number 5 on this list of companies that Robinhood investors are buying. Number 6, AMD, Advanced Micro Devices, microprocessor. They make microprocessors. Price to earnings 167. This thing is priced through the roof right now. A lot of anticipated growth priced into the stock. There's 2 super investors who own the company. Very low earnings yield because it's so expensive. It does have very compelling return on invested capital numbers. I don't think I mentioned in this video, earnings yield is basically Joel Greenblatt's measure of how cheap a business is. Return on invested capital is his measure of how good a company is. So very good business, Advanced Micro Devices, and very expensive. As a long-term investor, our ideal situation is to buy great businesses at cheap prices. Clearly, we don't have cheap prices currently with AMD. At number 7, Amazon. So, another huge company. We've got number 1 in the US, number 2 in the US. Amazon is number 3 in the US. So a lot of giant companies being purchased by Robinhood investors right now. Price to earnings 123, very expensive company when you compare what it's costing you per share to what you've earned in the last year per share. Lots of super investors own it, 16. Expensive. And obviously it's a great business. You can see in the description, online retail shopping services. Obviously it's much more than that as a company. But you see a write-up just from March. Just, what is that? Just from 5 months ago. The price of the shares have gone from 17.85 to 31.65. So a lot of appreciation in just the last 5 months on Amazon. A company that's really benefiting from, what's happening with the pandemic. But again, far too expensive for my taste. Mara. So this is, I haven't seen many cryptocurrency mining companies on the top 10 in Robinhood, but here we go. This company, I believe, started off in Quebec. Now their headquarters is in Las Vegas. Less than $100 million market cap company. No earnings. No super investors own this thing. And because there's no earnings, there's just not much to go on here. There's no write-up in Value Investors Club. So to me, this is a highly speculative play. And I don't bet on highly speculative plays. But again, it's interesting to see a cryptocurrency mining company in the top 10. Curious why now for this company. Bank of America. First time in the last couple of months I've seen Bank of America on this list. Warren Buffett is currently increasing his stake in Bank of America, which he already has a substantial stake. Charlie Munger's Daily Journal. Bank of America makes up greater than half of Daily Journal's holdings. So Warren Buffett, Charlie Munger, Guy Spear also has a large position in Bank of America. There was a write-up from about a year and a half ago at $26.86 per share. It's dropped a little bit since then. But banks tend not to fare very well in a recession. And considering the uncertainty on the horizon for the economy, for unemployment, potentially, things closing back down again, because what we're seeing with the trends in the pandemic could be a rough ride for banks. So might be a compelling price now. I just don't know. I don't really know how to value banks. It's not in my wheelhouse. And there's no earnings yield or return on invested capital because, banks aren't part of the magic formula stock screener. They need to be valued differently than most other companies, just because of their nature. But anyway, might be one worth looking into, Bank of America. And then this last one, small pharmaceutical company, like 280 million market cap. And it just doesn't check any of my initial stock screening criteria here. So not so interested in diving deeper on that one. Are any of these a buy now? Of the great companies here that everyone knows are great companies, Apple, Microsoft, Amazon, they're just super expensive right now compared to how they're historically valued on a price to earnings basis. So I can wait on those. I can wait for the prices to come down. Definitely on my watch list, but not in my buy zone. AMD, I had a subscriber not that long ago suggest that I valued AMD. And I passed on that just because there was no Value Investors Club write-up. Very few super investors were in it. And I didn't know how to value it. Could be one worth looking into. I obviously don't like this current price to earnings ratio. but I'm curious, what their long-term competitive advantage might be. So it's something I might look into, but not quite yet. ADT, it's been the growth has been very unimpressive. They seem like they've been pretty stagnant the last couple of years. So I'd be curious for ADT. What is the bull thesis? Why is this company going to start to grow where it's really languished the last couple of years? Bank of America, like I said, I don't really understand bank stocks, but Warren Buffett has been adding to his position. So any company that Warren Buffett has been adding is definitely worth a look. So if you have bank stocks in your portfolio, if you're interested in owning banks, this could be a very interesting company to look into. And then the rest of these cryptocurrency mining, biotech, blank check company, rocket companies all seem very speculative to me. So, the only one that I would look into if I were interested in kind of the banking sector is Bank of America. Nothing else really jumps out at me from this list. Let me know if you guys are investing in any of these companies right now, or if any of them are on your watch list. I'm curious to hear from you, and why any of these companies pique your interest. I'd love to learn more from you. So let me know in the comments. And that's all I got this week, guys, from the top 10 most popular stocks on Robinhood. I will see you guys in the next video. Take care.